I'm Jim Lebenthal, the Chief Equity Strategist at Cerity Partners and a member of our investment office. This is our outlook on the economy and financial markets for the month of October. Well, here we are. Summer is over and we're into fall. Now it's the race to the finish for the year 2025. It's been a very good year, whether we're looking at it from the perspective of the economy or the financial markets. We had a recent update to second quarter gross domestic product. It came in at 3.8%. That is a very high number. The third quarter is currently tracking at about 3.9%. I don't want to get too giddy, but wow, those are big numbers for an economy the size of the United States. And combine this with unemployment at 4.3%, durable goods orders growing, retail sales growing, and even a recent perk up in new home sales. This all gives us reason to think that this strength in the U.S. economy can continue. It's being reflected in financial markets, where we've seen a number of new record highs in equity markets, but we've also seen great stability in bond markets as well as commodity markets. The 10-year Treasury, as an example, is currently at 4.18%, a very modest level and reflective both of growth in the U.S. economy, but also a Federal Reserve that has restarted interest rate cuts and is likely to give at least one more cut before year end. Now, one thing that does seem a little bit new is a lot of media reports and chatter about, is the artificial intelligence trade a bubble? Comparisons are being made to the late 1990s tech and telecom boom, which of course ended in tears. But if we're going to use that as an analogy, we would say we're closer to 1997 than 1999. To look at a bellwether from that time period, Cisco Systems, in 1997, its forward multiple of earnings was around 28 times. In the following 2 years, it shot up to 120, a clearly unsustainable level from which it then plummeted back down to 28 times. If we look at many of the mega cap tech stocks that today represent the artificial intelligence trade, stocks like Apple, Microsoft, Alphabet, and especially Nvidia, they are all trading at around 28 to 30 times, or that same level as Cisco Systems in 1997. They haven't had that hyperinflated multiple that to us would indicate a bubble. Combine this with surveys that show that penetration of artificial intelligence usage in corporate America is only around 15%, and we do think we're in the middle innings of the artificial intelligence trade. However, if you have concerns in that regard, let us remind you that at Cerity Partners, we believe the equity market rally will continue to broaden, and that this will continue to include strong performance from international equity markets, which have done very well all year, as well as up and down the capitalization spectrum from large to mid to small caps, and into other industrial sectors besides just technology. In short, this is a very good time to own a diversified equity portfolio. We'll keep you up to date as events and news transpire, but thank you for listening to this update, and I look forward to seeing you again soon.